What's up everybody, Tom here with another video. Well, as we mentioned, we're in the month of September, and whether you like to admit it or not, September is often one of the weaker months in the market for the year ahead. Is this something we actually need to be concerned about, or do we just keep following the price action? Generally, all we know is that September tends to be volatility month. Stay tuned to find out more. Alright guys, well here begins our market recap for the market close 1st of September 2021. In today's video, we'll be going through our technical analysis levels for Bitcoin, Tesla, AMC, gold, the volatility index, indices, and more. Here straight away, you'll notice really it's a sea of some things green, some things are red, it's all over the place. There's only two sectors that come out and I noticed them straight away, real estate and utilities. When we take a look at the actual indices for the session, everything started pretty well, but then they all sold into the close. And we know the last hour is the hour of power from Wall Street themselves, and they pushed every one of the markets down to basically flatline it. And after the markets, the futures actually went a little bit lower, which we'll be talking about soon. When we're talking about markets going up or down though, we've got to always look at the sectors because the sectors become the most important part for us to understand. And if things like technology are going up, consumer discretionary, semiconductors, energy, financials, industrials, all these sectors are going up, then it's a healthy market. And it means that there's very little chance of course, pullbacks occurring. But if we have stacked money going into things like utilities, consumer staples, that can often show us early warning signs that maybe Wall Street is starting to rotate into some of the defensive sectors. And you'll notice here, they were the only ones rising pretty considerably throughout the day and holding steady. Everything else kind of started to decline near the close. When we move over to some other things that we want to discuss before we get into a technical analysis, we need to also know, what does September tend to bring us? Well, it tends to bring us a relative increase in the VIX. So basically, this is volatility for the month. Now, does this mean that the end of September is going to be negative to the start of September? No, it just means that there is often trading volatility within this month. So it's a good one for day traders. It's a good one for potentially swing traders as well to get involved in buy the dip style scenarios, or of course, technical analysis moves between ranges. So volatility is set to spike. When we go and have a look at the VIX or the volatility index, we'll notice it's sitting around 16 though. So just around 16 or under is our designated area for starting to think, maybe this is going to spike sometime soon. The reason we say this is because the VIX underneath 16 into the 15 zone was found during the 2010-2011 period to be the base of the VIX. So notice over here, after the global financial crisis, it stayed fairly high for a couple of years before returning back to a more normalized state. Anything over 20 is considered, of course, bearish in action, and fear is rising heavily. And anything in this 15 to 16 area, for now anyway, in this current period, means that it's getting close to that low. So it's something to watch there for VIX traders, for people looking for that volatility. Speaking of other volatility, we're still seeing a lot of moves through the dollar index. This is still a very important thing that everyone should be looking at. We notice here the 50 exponential moving average on the daily is coming under more pressure. We correctly analyzed that the 92.80 was going to be a key level of resistance. We haven't changed any of these lines. And of course, the 50 is the key level of support, which it bounced off last time. So this is really the time. It's the point where the dollar index is going to make a decision. A close underneath this is going to really put pressure on the downside, potentially back into this area here, which is the 91.80 area. And a close up to the top side above 92.80 should expose 93 plus. So hopefully we do get some direction here from the DXY soon, because that's going to help trades like, of course, gold and others. So gold, long leg doji on the daily, still struggling around, couldn't get past that 1820. 1830 is the next target, and of course we've got the 1806 support. So if we are trapping up gold, we want it to get past 1820. Ideally, this occurs. We'll move over to silver because that's been more interesting. Silver's putting really big pressure right here on the 2420. We've spoken about this a lot of times. We have above the 20 moving average now on the daily close. Fantastic. That's a good sign for silver. We've got daily, of course, long leg doji. We've got rejection here, rejection here. We're looking for a closure above 24.20 on a significant time frame, and that to push to the next level, which is 24.60, and then 25, etc., etc. This has formed a very nice base now. We've got a trend line we can pop in there as well on the smaller time frames. There's a lot of things to like about silver, but it's just got to do that little bit extra. Remember, it's that slight extra bit of confirmation that can really make or break many traders' trades. And this is one of the things that I look for in the silver trade at this stage. Now we'll move over to one of our favorites, Tesla. And look, it didn't perform great yesterday, 0.22% down. You'd say, wow, that sucks. But it didn't perform poorly. I mean, the indices almost were down more in some ways than this one. But this is the time for Tesla. If it's going to get it through, it really needs to do it now. You can see it's rejecting that 740, the top end of the long leg doji, which is this candle here. And why is it doing so? Well, I think it's a lot to do with the flow. So let's just quickly scroll this out. You'll notice here the flow taken from our private community bot. If you are interested in getting access to this, you can do so. 7-day free trial in the description below. But realistically, Wall Street wasn't coming along with the Tesla flow yesterday. You can see this red line here shows the algo flow. This is the realistically showing you the flow of the markets for the day, and it just wasn't positive towards Tesla. That being said, also the options, the net difference between the puts and the calls also reduced heavily. We had some really strong strikes on 750 earlier in the week, and now the net difference is becoming a lot less with a lot more puts opened at all strikes, and only really the 740 is maintaining at a high level. So let's think about it from a scenario of this. We get to Friday, we close around 740, and then the next week opens up. Currently, the next week, and the week after that are all have massive bearish bets on them. So if the market is going to get through, if we smash 740, then we should be off to the races. If we get past 740 next week and we start moving up, well, there's just no real calls sitting, or not enough calls sitting at any one of the strikes. So it should be free for all if the bulls can take control. And that's something we do like to use from this heat map. But what I think is most interesting is how many negative bets are being placed here before retail starts looking at them for the month of September into October. Little known fact, actually Tesla has one of the better seasonals on it, and that seasonal starts and tends to start in November, October late into November. And look how many calls are here at 700. Wow. Someone's really betting on that November into December spike. If you look at the last couple of years, the best trading has often gone on around that time, been very, very good. Let's move over now to AMC. This did drop back after trying to pressure that 48 area. Look, we kind of suspected this would be a key zone for it. If it gets past 48, 52 is the next zone. It's filled the gap. It's pulled back to, I guess, another closure point as well, which some people might like. I think that it's actually not too bad. I mean, yes, you could say, oh, it's down 7.3%. That's terrible. But look, every squeeze was kind of falling off yesterday. All the squeezes went up. This is always what happens when the money disperses and everyone gets excited about everything else. We've seen SPRT, obviously GME, AMC, Skills, whichever one you want to look at. There's plenty of different ones out there, but this makes sense for a bit of a role reversal zone. I would hope the next session is positive here for AMC. And again, the algo flow showed the negativity here. Wall Street was also selling through the day into the close, and this makes sense. If you don't have the big guys with you in these squeezes now, it still won't necessarily move up. You've got to have everyone on board the choo-choo train, as they say. Let's move over to IWM. This one has continued to find some strength here. So we've had the previous resistance becoming support. I guess it's been an okay trade. We've moved through the 227. Next target would be about 230. And then the target after that would be 233. I've mentioned several times, I think this is more of a channel on the bigger time frames that you're looking to sell the top, buy the bottom, and sell credit throughout the whole thing. But otherwise, it is still stuck in that range, and we'll continue to follow it. Now, this is where things get interesting. So we've got the Bollinger out today. We've got obviously our trend lines that we're sitting right around here, approximately for the QQQ. And what you'll notice is you had what could have been a hanging man style candle through the last 24 hours. And then we have here the shooting star candle. Now, what's happening? So firstly, it's all outside the Bollinger. So this is the Bollinger standard deviations normal setup that you put on. we're outside the daily Bollinger. Now, you do hit outside the daily Bollinger, and often that starts a bit of consolidation after a large move. You'll see here it's like tapping the Bollinger on the way up, but not really closing outside of it. Now, when you have this type of candle, I guess the thing that I usually look for is usually bearishness. When you've got a hanging man, you want to see a bearish candle, and then you take some shorts lower. The other thing is the hanging man, I prefer it when it gaps up and shows like that. So if it does that type of thing, it is a better style candle. However, with a shooting star, what really is this market telling us? Well, if we go to the 2-day, what's it going to become? It's going to become a long leg doji on the QQQ NASDAQ outside of course, the Bollinger. This shows us full indecision. And the cool thing about this is I really think it shows us a very key zone of closure either way. If during the session we get underneath, we should continue weaker into 375. Makes sense. This will be a buy the dip style thing for a lot of people out there. If during the session we move up and we start moving through the top here, which is around 382.77, then we should continue forward and basically start to move towards that NASDAQ 16,000 style scenario. So we've got long leg doji. We have the true indecision at the peak. It's amazing to see how only in 2 days we've put together realistically a very neutralized market that doesn't know what it wants to do after those large moves. And this is what September can bring. If we get the VIX increasing, if we get, of course, some sell-off in these indices over the futures session, it really could be on through the next couple of sessions to get down to the 374 or even the next level, which is around 369. If these two levels do get breached, then of course after that we're talking about 360s, and we really are talking about the bears actually getting control of the market. But for dip buyers, they're going to be looking closely at 375 and 369 on the NASDAQ. It makes sense. And for big long-term bulls or the bulls that want to take the trades, I think you're looking for a break of this yesterday's high. That's going to be a key point. Let's move over to the SPX again at one of the trend lines here. You can see all the previous peaks and how they've held it in. It's struggling as well. It's not quite creating long leg dojis or indecision candles, but it certainly is struggling. 4,500 is the obvious choice for dip buyers. 45.20 is kind of the intraday price. And then underneath that, you're going to be looking at really a fairly significant pullback, 44.80. And then after that, really could be quite deep. So there's a lot of small little miniature moves. Is it time to panic? I don't think so. Is it time to, reassess maybe your day trades? Absolutely. Get your levels up and get ready for some potential action here. We have seen a slight increase in volume as well. Surprising considering the small moves. Move back over the QQQ. Slight increase. Barely bearish though. Very small moves. Bigger increase. Someone's dumping. Who is it? We don't know yet. Let's move over to Ethereum. So Ethereum was a great trade yesterday. We did talk about this one. Obviously, anyone that spotted that resistance has done a good job. I think this is always a key zone to be looking at. We got the closure. We got the follow through. It went further than I thought it would. It overshot my record, which was about 3,700. That's what I was looking at. Hit 3,800, which is excellent for many out there. And I would expect it to probably have a little bit of a chill right now. If we move over to BTC, this one here is trying its best. It's still holding that 20 barely. It did close above. That's a bullish sign there. It's probably looking to get past that 49.2 area to really start ramping to the 51.5, which was my target after we broke through all of this accumulation Wyckoff area. I thought 50 could have acted as some resistance, but overall looking for that 51.5, and then after that looking for the 55. It's still a great market, and really, again, it's just like anything. You're looking to see the signs of weakness, and we don't see it in BTC shorts. There's no nasty whales trying to eat us, the krill. They're just not doing it. We're the krill. They're not coming for us right now, and you always want to be checking all of the shorts for the major two. Now, if you look at ETH shorts, you'll notice that's starting to increase, so there might be some downward pressure here on Ethereum. But BTC shorts, still very clean market, still looks absolutely fine on those charts. I want to also remind everybody we do have some big bits of news coming out. Now, usually I would never mention unemployment claims 8:30 a.m. on the Thursday session, but maybe it'll be worthwhile having a look at it. Might knock around the futures ahead of course, non-farms. But really, it's all about non-farms. We'll be live streaming it here on the channel. Remember to subscribe. Join us 1 hour before the New York Open session happens. And as always, I want to wish you all the best out there. And if you enjoy the videos, make sure you smash that like button. Thanks so much, guys. See you in the next video. Bye for now.